Hello, Adam Khoo here, and in this video I'll be focusing on a very important topic, which is what it takes to become a winning trader in the financial markets. So whether you're a beginner and you're struggling to get profitable, or you've been trading for many years and you want to up your game to be more consistent in your results, I believe that this video will really add a lot of value to help you to reach there a lot faster. So before I start, a bit about myself. I've been trading for the last 26 years, since the age of 18 years old, so you can kind of guess my age today. I've traded in the Singapore markets, the Malaysian markets, the Hong Kong markets, but today I primarily focus on the US markets. I trade both stocks, which is equities, as well as Forex, and I approach the market in many different ways. I trade throughout the day. I'm a swing trader where I hold a trade over several days. I also trade intraday on currencies, and I also day trade stocks when the market opens for the first couple of hours, where I hold the trade for, again, just a few hours. I also scalp the news in currency markets and scalp stocks that are announcing earnings when the market opens as well. And in my scalping strategies, I enter and exit the market within a few minutes. So again, I approach the market in many different ways, and I hope that through my experience, I can add tremendous value to you to help you to become a better trader and investor. Besides trading full-time, I also spend my time mentoring people who want to become better investors and traders. So I coach people through the Wealth Academy program that I've been running for the last 12 years. We run it live in Asia, Singapore and Malaysia primarily, as well as in the Philippines. I also run online trading courses for people from all around the world, from the US, the UK, Saudi Arabia, Africa, literally from all around the world, helping people to become better traders in the currencies and the Forex markets. And the stock markets, I mean. So enough about me. What's more important is about you, how you can become a better trader in the financial market. So let's begin and let's see what you can really take away from this session. So what makes a winning trader? I believe that there are three things that you need to have, or three qualities. And the first thing you need to have is you need to have a trading system. You need to have a trading system with a positive expectancy, or we call it a statistical edge in the markets. Now, what does that mean? That basically means that when your system has a statistical edge, as long as you keep trading, over time you will always make money. Now, it doesn't mean that every trade will be a winning trade. No, some trades could be winning trades, some trades could be losing trades, and you don't know when you're going to get either one, right? In the short term, every trade outcome can be random. But as long as you have a trading system that gives you an edge, you know that over time, you will win more than you lose. Your average winners will be bigger than your average losers. And that is what leads to consistent profits over time. All right? Now, what is a trading system? It is actually a specific set of entry rules and exit rules that you follow consistently without deviation, without emotions getting into it, without intervention, right? And they must be based on a sound methodology that works in the markets, either fundamental or technical methodology. Now, this sounds like common sense. The reality is, most traders do not have a trading system. Or even if they do have a trading system, they don't follow it, okay? They get distracted and they buy and sell based on attempting to predict the future. Oh, I think that the stock market is going to go up. Now I'm going to buy it. All right? Or they listen to opinions from people from CNBC or in the news. All right? This guy says gold's going down. He looks smart. I'm going to short gold. Warren Buffett bought IBM. I should buy IBM. And that's the way that you should not do it, right? Because these different people look at the markets differently. They may use different strategies. They may have different time frames. Like Buffett's in it for the next 20 years. Are you? Right? So you got to always stick to the strategy that works for you, that works for your time frame. So what makes a good strategy? I'm going to share with you some of the strategies that I use, right? In swing trading, in day trading, in stocks and Forex, so you have an idea about what constitutes a good trading system. So one of the systems I use is a trend-following swing trading system used on stocks. And this is based on daily candles, and I call this my bounce system. Now, why does this system work? It is based on a sound methodology that prices tend to trend, that a stock on an uptrend is more likely to move up. A stock on a downtrend is more likely to move down. It is statistically proven, all right? And we base our system on this probability. Now, when a stock moves on an uptrend, it doesn't go up in a straight line, right? It moves in a series of impulsive and corrective wave patterns, all right? So, in other words, it makes an impulsive wave, all right? It's kind of like breathing, like breathe out. You can't breathe out forever. You have to breathe in before breathing out again. So after the impulsive wave, we've got a corrective wave, profit taking, right? And then the next impulsive wave, a corrective wave, impulsive wave, and the trend continues until the trend reverses, okay? Now on an uptrend, we must see the pattern of higher highs, right? Price making higher highs and higher lows. So once we see that, we want to enter at the end of a corrective wave and right at the beginning of a new impulsive wave. So we want to buy right there at that point, and we want to exit somewhere there, right? Before the next corrective wave down. So we call this a swing trade. We get in and get out for a quick profit, and then we find another stock with that same pattern, right? Enter there and exit there. Now, question is, how would you know that it is at the end of the corrective wave, that it is beginning the new impulsive wave? Now, you can't predict for certain, but based on probability, we know that usually at the end of a corrective wave, the price would hit a support level and form a bullish candlestick pattern. So we're looking for the price to retrace and to find support at a key moving average. So I like to use the 50 moving average for this system. So I'm looking at the price hitting the 50 moving average and forming a bullish candlestick pattern, and I enter right at that point. Now to increase my probability, I use an oscillator, right, which is known as the full stochastics. This oscillator measures when the stock is oversold or overbought. It's kind of like a rubber band. When you pull the rubber band too fast down, it will snap back, right? Stocks work the same way. When it's oversold, it tends to snap back. So at that point, I want to see that the stochastic is oversold. So now you understand the methodology. Let's put it into a trading system of rules. First, the specific entry rules. Now bear in mind, I don't use this trading system on any kind of stock, right? It's got to be used only on very high momentum stocks that are surging up on a high volume. They have strong relative strength compared to the S&P 500. So that's number one. Number two, I want to see a clear uptrend pattern. So how do I know it's an uptrend pattern? Well, I want to see the price making higher highs and higher lows. Higher highs and higher lows. And at the point of entry, it must make a higher low than the previous low, right? Very specific. So that's number one, that's number two. Next, I want to see the price retracing and testing the moving average, right? Test the moving average. And how do I know that this moving average is a strong support? How would I know? I want to see that the same moving average has been tested before at least once, so it is reliable support. Next, at the point of bounce, I want to see the stochastics below 30. This tells me the price has been oversold due for a bounce, right? So once I see that, I can place my buy order. Now, where do I place the buy order? I place the buy order a few cents above the high of the first bullish candle that appears, right? A few cents above. So in this case, my buy order's at 36.50 right there. There you go. Those are the entry rules, okay? Very specific. What are my exit rules? So I either exit at a loss or I exit at a profit. And I have to predetermine beforehand how much loss I'm willing to take and how much profit I want to take. It's going to be predetermined, right? So I place my stop loss just below the lowest point of the retracement. We call that the swing low. So in this case, my stop loss is at 35.30. So I'm buying at 36.50, stop loss at 35.30. What is my risk per share? It's $1.20, right? I call that my 1 hour distance. If I'm risking $1.20 per share or 1 hour, I want to make at least 2 hours to make it worth my while, right? You must always have a risk to return ratio of at least 1 is to more than 1, right? 1 to 2, 1 to 3, 1 to 1.5, whatever works for you. Okay, I like to use a 1 to 2 system here. So if I'm risking 120, I want to make at least 240 or 2R. So 240 plus 36.50 is 38.90. So that's where I place my profit target, to exit at a profit. Okay, so I take profit at 2R above entry. So there you go. This is a specific trading system, right? And I follow this system of entry and exit rules exactly every single day. I don't have a winning trade all the time, but at the end of every month, I'm always profitable. At the end of every year, I'm always profitable because of this edge I have in the markets. So that's one of my trading systems. Let me share with you another one. Would you like to know another one? Okay. So another trading system I use is based on Forex. So I trade Forex literally 24 hours. But when I trade Forex, I trade it on the 15-minute candles. So I trade it as a intraday or day trader on 15-minute candles. And again, for Forex, my methodology is based on a trend following system as well. And this strategy is called the Trend Continuation Entry Strategy, or called the TCE strategy. So again, what are my entry rules for this? Specific entry rules. I look for a currency pair on a very clear uptrend, making higher highs and higher lows. Right? So in this case, I'm trading the franc yen currency pair. I apply this on all major currency pairs. I've got a kind of like a screener to help me to find trades every single day. Right? It's part of the tools that I use. Next, so notice the price makes higher highs, right? And higher lows, You must see this higher high, higher low pattern. Okay. Next, I want to see the price retracing and testing one of the moving averages. So it could be the 18 moving average, the 50 moving average in this strategy. So in this case, it is retracing, and you can see that it's testing the 50 moving average, the blue line. Can you see that? Okay, now, again, how am I convinced that this moving average is a strong support? How do I know? Because I want to see that recently it has been tested before. There you go. Tested before. Very important, right? So once it hits the moving average, what am I looking for? For this strategy, I'm looking for a consolidation pattern, that the candles move sideways, right, before breaking out. So I look for at least a 4 candle consolidation. So it's going to be very specific. I'm looking for 4 candles, right? So in this case, what are my 4 candles? I've got 1, 2, 3, 4. 4 candles that are consolidating. So once I see that, I will place my buy order. It's a buy stop order just above the consolidation pattern. So when the price breaks out of the consolidation, it triggers my buy order, right? So in this case, I'm buying at 3516, right? That's my buy order at 3516 in this case, right? Sorry, I think I've got the numbers are a bit mixed up here. It should be 110.27. I apologize. I think I pasted the wrong thing over there. So anyway, that's my buy order, right? And my stop loss is over here at about 110.19. So sorry, let me do some quick math, right? So my buy order is at 110.27 minus 110.19. That's right. So my stop loss distance is 8 pips. Right? So I'm risking 8 pips for this trade. So if I'm risking 8 pips as my 1 hour distance, what's my profit target? It's going to be double, right? At least 2R or 16 pips. So I place my profit target 16 pips above my entry price, which in this case is 110.43 on the franc yen pair. Again, I apologize for this. You know, this was pasted on another trade, so a bit of typo over there. Apologize for that, right? Okay, great. So those are my entry rules, very specific. Again, what are my exit rules? Again, I either exit at a loss or exit at a profit, and I have to predetermine my loss before I start and predetermine my profit, okay? So I place my stop loss, like I said earlier, just below the consolidation pattern right there, all right, at 11019. And I take profit at 2R. So there we go. So again, every single day, I look for trades that have this pattern. And I usually take 1 to 2, sometimes 3 trades a day. And I keep following these rules consistently. And again, not every trade is a winner, right? Not every trade is a loser, okay? But at the end of every month, I'm always end up positive for this strategy because I do a large sample of at least about 20 to 30 trades a month, and the winners cover the losers, giving me a net profit. So that's how one of the ways I trade currencies. I've got many other strategies. It's just one of my strategies. Would you like to see another strategy? All right, let me hear yes. Can I hear yes? Yes. Okay. All right, good. I'll share with you another strategy. And another strategy I use is, okay, basically this is what happened to that trade earlier on, where you can see the price broke out of the consolidation pattern, right? And it triggered the buy order over there. And 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. In 12 candles, it hit the target price. All right, so bear in mind that each candle is 15 minutes. 15 times 12 is 180. That's about 3 hours. So this trade lasted 3 hours. Now, it's a very long trade for this system, right? Most of the time, I exit within less than 1 hour. So this was actually a pretty long trade, 3 hours, all right? And that's day trading for you. Okay, let me show you another strategy which I trade on the stock market. And this is my favorite. This one is the most profitable strategy that I have. And it's called the Gap Up News Scalp strategy, or I call it the GUNS strategy, G-U-N-S, right? So this strategy is a scalping system. Scalping means I get in and out within a few minutes. And this system is traded using the 1-minute candles, right? Using the 1-minute candles. Now, what I do every day before the market opens, and again, the US market opens at 9:30 a.m. Eastern Time. That's 9:30 p.m. Singapore time. So at about 9 p.m., 30 minutes before the market opens, I'm building my watch list of stocks that are gapping up on high volume, right? So I look for stocks gapping up more than 5% on high volume with a news catalyst. So I want to see the stock has a strong catalyst that's driving it up today. So it could be earnings release, could be a patent approval, some kind of news that's making the stock surge up and everyone is rushing in to buy the stock. Okay. Now, the moment the market opens at 9:30, I watch the 1-minute candles, and I'm looking for a series of bullish 1-minute candles. So you can see these candles are 1 minute, right? So bullish, 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 bullish. So I'm looking for bullish candles. If the market opens and it turns bearish, I'm not interested. The trade is invalidated. So very specific rules. Gotta have bullish candles. So I look for bullish candles and I'm looking for the first pullback candle. What's a pullback? A pullback is a candle that makes a lower high. So you can see over here, let me zoom in. It makes a high, higher high, higher high, higher high, higher high. So although this is a bearish candle, but it made a higher high. So it's part of the impulsive wave. Now this candle that you see here, that's the first pullback candle that makes a lower high. And that signifies minor profit taking. Okay, so once I see that first pullback candle, I place my buy stop order just above the high of the candle. In this case, $5.98. Just above the high of the candle, right? So what's my exit rule? My exit rule would be a stop loss below the low of that candle. In this case, 573. So what is my risk per share? It's about 20 cents. So you can see that for a scalping system, my stop loss is very tight. 20 cents stop loss And my profit target again is 2 hours or more. All right, where I aim for about 40 cents profit target at about $6.61, or sometimes slightly more than that. So the next candle goes above the high of the pullback candle, triggers my buy order. So I'm in the trade 1, 2, 3, 4. In 4 candles, I take profit. So in 4 minutes, I'm out of the market. Right? So every day I look for 1 to 3 stocks to trade in this way, and I can take again about anywhere from about 30 or 40 trades a month, and I end up every month profitable with this strategy. Because again, the methodology is catching stocks that are going up on catalysts, and we capture the 1-minute candles, right? So these are trading systems. And you can see that, so these are trading systems. So if you take a look on this slide over here, you can see that, right, there are many kinds of trading systems that people use, and there's no one right system. There are many systems that can work for you. And again, you have systems on stocks, on Forex, on options and futures. You have got trading systems based on scalping, on swing trading, on day trading, on position trading. So there's a trading system for everyone. And again, there's no perfect system. Every system has its pros and cons, right? And again, trading systems, you've got trend following systems that follow the trend. You also have got counter trend or mean reversion systems. And basically what's important is for you to stick to a trading system that fits your personality, that fits your lifestyle. So for example, if you don't have the time to look at the markets throughout the day, then it's hard for you to trade Forex on 15-minute candles, right? But if you're kind of like a professional trader like me and you can watch the markets, every day, then you can trade that system, right? If you're someone who's got a day job and you're really busy, you can only look at the markets, for 30 minutes a day, then you have to follow a swing trading system using daily candles, right? If you are free at 9 p.m. every evening, you can trade my gun system where you get in and out within just a few minutes, and normally by 10 p.m. I'm done for the trading day based on that intraday system. So for my students, I teach them all these different trading systems, and I say you don't have to follow all of them. If you just follow one trading system, you can be very profitable. You can make a very good extra income for yourself. But I've got some students who are now doing this full-time professionally, and they trade all the systems, and they're able to, again, build their income and their wealth a lot faster. So it's really up to you, right? So enough about trading systems. So again, that's number one. You've got to have a trading system. But notice that in the entire pie chart, I only allocate 10% to the trading system, which means the trading system is very important, but it's not as important as the other two qualities, okay? It's easy to learn a trading system, but the other two, it takes practice and experience to really internalize it. So 30% of your success comes from what I call position sizing or money management, okay? Now, you can use the best trading system, but if you have a poor money management method or you do not size your positions the right way, you can also end up losing money. And I'll explain why in a while. So in position sizing, you know exactly how many shares to buy or how many shares to sell or how many contracts to trade. So how many shares you buy should never be based on emotions. Like, I feel confident, I'm going to buy more shares. I'm not so confident on this trade, I'm going to buy less shares. So you can't do that, okay? The number of shares you buy is based on a mathematical formula. And I'll show it to you in a short while. And you must always consistently risk a small percentage of your capital on any single trade. You always risk anywhere from 1% to maximum 3% of your capital on any single trade. Why? Because no matter how good a trading system you have, you will go through losing streaks where you can have sometimes 5 or 10 losing trades in a row. It happens to everyone, even the best traders in the world. So if you risk too much, if you risk 10% of your money on one trade, for example, and if you get a losing streak of 10 losses, you can get wiped out. Psychologically, you get wiped out and you give up, you blow your account. So never do that. Always risk 1% to maximum 3% so that you preserve your capital in the event of a losing streak that is inevitable in trading. Okay? let me show you this table, and this is based on mathematics, okay? Now, as a trader, our win rate is usually between anywhere from, I would say, 50% to 60%. Okay, that is a reasonable win rate for any trading system. Of course, there are months where you have a winning streak and you can have a 70 or 80% winning rate, but that doesn't happen every month. Be realistic, right? There are also certain months where you're a bit unlucky, a bit sway, and your win rate may go down to even 45 to 40%. It can happen, right, in trading, right? But on average, you should have a win rate of between 50 to 60%. That is a healthy win rate. Now, even with that win rate, guess what? There is a probability that you're going to have 12 to 16 losing trades in a row. But at the same time, you can also have 12 to 16 winning trades in a row. Now, it's kind of like tossing a coin. A coin has a win rate of 50% if you're going for heads, right? But when you toss a coin, you don't always get win, loss, heads, tail, right? Sometimes you get many tails in a row, many heads in a row. Now, there's nothing wrong with your coin. It's just the theory of probability that in a small sample, anything can happen in the market. So always ensure that in an event that you have a losing streak, you lose very little of your capital. So always do that. Okay, so how do we calculate your position sizing? Okay, here are the rules. Please follow them, right? So again, let me review. Always risk a fixed percentage of your capital on any given trade. So let's take an example of risking 1%. And once you risk 1%, you got to be consistently risking the same amount until you choose to upgrade to 2%. Then you stick to 2%. Do not go from 1% to 3% to 1%. It doesn't work that way, okay? Now, how many shares do you buy? Okay, here's the formula. You take your risk per trade, which in this case is 1%, right? Multiplied by your current capital. How much capital do you have? So say you have got $10,000, for example. So 10 grand. And you divide it by the risk per share. So for example, if you're buying at $10, your stop loss is at $9.50, your risk per share is 50 cents, right? So this is the formula you use to calculate the position size. So let's look at an example over here. Okay, so let's imagine you want to go long on a stock at 860, right? Because it's bouncing off the moving average, for example, based on the first trading system. And you place a stop loss at 790. Now again, how do you determine where you place the stop loss? It's based on that specific strategy. So in my first strategy, I placed my stop loss below the swing low candle, right? So in that case, 790, for example. So what's my risk per share? So my risk per share would be 860 minus 790, 70 cents, okay? So again, if I'm risking 70 cents, my profit target should be double of that, which is 140. Okay, so in this case, how many shares do I buy? So again, I use this formula. Okay, so what's my risk per trade? 1%. Okay, which I've predetermined. What's my capital? So let's imagine my capital is $10,000. Okay, so 1% times $10,000 is $100, which means that the most I can afford to lose is $100 on this trade. That's my maximum loss, $100. Okay. Now each share I buy, I'm risking 70 cents. So how many shares can I buy? Take your total risk, which is $100, divide by risk per share 70 cents, and you get 143 shares. Ta-da! There you go. So now you know how many shares to buy. You buy 143 shares. Okay. So if each share is $8.60 and you're buying 143 shares, what is your total position size? You're taking a position of $1,200. Now, so in other words, out of 10 grand, you're investing or trading 1,200. That's your size per position. Now, is this your risk? No, that's not your risk. Your risk is $100. So your position is not your risk. Does that make sense? Okay. So if this turns out to be a losing trade, how much do you lose? You lose $100, which is 1% of your total capital. If it's a winning trade, you win $1,000. Sorry, wrong. You win $200, right? Double your risk, which represents 2% of your trading capital. Are you with me so far? Okay, good. I hope you understand that. So again, this is known as 1R and that's known as 2R. So I always calculate my winnings in terms of R, right? I always say I've got a 2R win or I've got a 1R loss. And that's how I approach my trades. All right, so now let's take a closer look at the mathematics behind a trading system with a positive expectancy. So again, how do you have the confidence to keep trading your system? You have to calculate the expectancy of your system. All right, so this is the formula that we use, which is the expected profit per trade on a large sample of trades equals to percentage win times average win minus percentage loss times average loss, right? So as a trader, you got to really understand this formula. So here's an example, all right? So let's imagine you have a starting capital of $10,000. And again, an average loss is minus 1R, remember that? And average win is 2R. So how do you calculate your expected profit? So let's assume an average win rate of 50%. Let's be really conservative. I know some of you say, but Adam, my win rate can be 70% or 80%. Yeah, on certain months, I can do that as well. But let's be conservative. Let's just take a 50% win rate. Okay, anything above that's a bonus. Okay, fair? Right, good. So in other words, if you calculate in terms of R, okay, in terms of R, remember, 1R represents 1% in this case, or 3%, right? So 50% of the time, you will win 2R. And 50% of the time, you will lose 1R. So what is your expected profit per trade? It is 0.5R per trade. And that is a pretty decent trading system. So as long as your trading system has a positive expectancy, it's a good system. I would say anything between 0.3R to 0.5R is a pretty decent system. If you can get higher than that, then that's even better, of course. So what does this mean? What does a 0.5R per trade means? That means that when you trade over a large sample, right, some you win 2R, some you lose 1R, but on average, you should get about 0.5R per trade. And what this means is, if you do 120 trades a year, for example, which is about 10 trades a month, right? You should expect to get 120 times 0.5R. You should expect to get 60R a year. 60R a year, okay? So what does 60R mean? Well, if you risk 1% for each R, that represents 60% return on your capital a year. If you risk 2%, that's 120% return on your capital a year, okay? Now for me, I've got different portfolios. I've got a portfolio where I risk 1%, right? That is my swing trading portfolio, right, for stocks. Then I've got my Forex portfolio where I risk 3%. Well, one reason I risk 3% is because it's a smaller capital. And because I take more trades, I've got a larger sample to ensure I can be profitable at the end of the month. So it also depends on the size of your capital, right? How much you want to risk, right? Last year, we've got this guy called Yen Yi. And Yen Yi, actually, he's actually been a teacher at the Adam Khoo Learning Center, one of my subsidiaries where he teaches mathematics. And he's actually focusing on teaching kids. And he said to me, you know, Adam, as a teacher, I can't make millions of dollars, right? So I said, why don't you start trading to earn extra income? And he was fascinated. So he joined my courses, and of course, he got it for free because he's one of the staff of my subsidiary. So that's the advantage of working for the Adam Khoo group, okay? And his goal was to build up his capital for his wedding. You know, he's getting married in September of this year, right? That's his beautiful fiance. And he was very grateful to me. He wrote me this nice email. He said, "Hi Adam, I'd like to share with you good news. Before attending your Wealth Academy, I've been making huge losses on all my trades as my decisions are based on hearsay and many times started doubling down each time I lose. I didn't believe that I'm so unlucky that I will lose every trade. Eventually, the market proved me wrong and really taught me a lesson. It got me frustrated losing away all my hard-earned monthly income. I decided to give trading one last shot by attending your WA Pro program after that. After attending the program, I've learned that managing my emotions and psychology, which I'll talk about in a short while, is the most important aspects of trading, and only take valid trades that meet the rules, regardless of the results in the short run, will lead to success in the long run. Absolutely, right? The support group that the WA gave me after the program with fellow senior traders and you really gave me confidence and provided a safety net before I trade. I've learned that every strategy has its ups and downs, absolutely. And it's not useful to just focus on individual trades. And what was the result of him? In 1.5 years, this is his statement from Interactive Brokers, right? He managed to grow his capital 169.83%. That is almost 170% return in profit in 1.5 years, right? And that's not the end of the story. In fact, after I shared his story, he said, Adam, hold on, I give you my update, all right? Which was 6 months later, and he said, now, after 6 months, which is basically 2 years of trading, I've now grown my account to 195.9%. And that's amazing, right? Following the rules and getting these kind of results. And I've got Jing Hao, who attended my program in Singapore also about 1.5 years ago, right? And he said, hi Adam, I'd like to express my gratitude towards your investment learning course. It really benefits me. I started with a small capital of 10,000. My profit may seem small, but in terms of percentage, I've obtained 80% return in 1 year. I'll continue to work hard and target higher returns with higher profit. Besides, you offered the trading platform with very competitive brokerage fees, so that helped him to reduce his brokerage costs as well. And this is his statement from Interactive Brokers. By the way, I'm not promoting any broker, right? You can use whatever broker you want. It's just that my students choose to use certain brokers and I choose to use certain brokers, but I do not promote any brokers, right? So let me make it use whatever broker you want, right? All brokers can be good, yeah? Now, so you can see from January 1st to December 31st, Jing Hao got an 84.3% return on his capital. And again, he just started trading as a newbie. He knew nothing about the markets. He was an accountant, right? He came, he learned, and he did really well. So when you have a trading system, when you follow strict money management, you can do really well in trading. And this is another guy, his name is Lee Ba Tan, right? He's from Vietnam. And I conduct my courses live in Vietnam as well. So he attended my course about 2 years ago. And now he's one of my best traders. And he also comes to help me as a volunteer coach, to coach other aspiring traders in Vietnam, Ho Chi Minh City, to become professional traders, right? You can see he's consistently profitable every single month. Take a look at his results. This was for the last 4 months. This was in, that's right, that's April. This is May and June, right? This was the last time he sent me. He got 14% return in April, 30% in May, 16% in June, right? And he's doing really well, okay? And this other person from Vietnam, her name is Tao. I hope I got the name pronounced correct. Tao. Her name is Tao. And she said, Dear Adam, at the moment, I'm very happy to say big thank you for your stock investment training. Okay, I got over 100% return after 2 years from January 2016. Right? She said, I still remember that 2 years ago, on the last day of the training course, I got the certificate from you. When I received it, I feel deeply sad in my heart. I was wondering what happened, right? I cried on the way when I'm back home. Because to take this course, I sold my new Note 4 cell phone. Yeah. You know, in Vietnam, they only earn $500 a month as a manager, as a graduate. So for many of them to afford to attend a course or to fund their account, they have to sell their motorbike, sell their phone, save for many months to just get started in the markets. But they are very, very hungry and committed to success. So I really salute my Vietnamese students. Many of them don't even understand English well. So they learn through a translator. And that makes it even more amazing, right? She said, I sold my new Note 4 cell phone, which I just bought 1 week ago. Also the first time I invested the phone in my life. Additional, also took all my annual bonus, just received from my company to pay for the full fee of the course and to take out my life savings with only $2,000 for capital investment. Now, that's commitment. But take a look, guys, what has happened to her after 2 years. You can see from December 2015 to January 2018, Tao has managed to get a 119% cumulative return on her portfolio, right? And it's amazing, trading the US markets, all right? That's really amazing, guys, right? So if these people can do it, you can do it. Anyone can do it. All right, so let me move on. So what's the first thing again, guys? You got to have a trading system with a statistical edge in the markets, right? Number two, you got to manage your money well by following a position sizing system where you risk only a small percentage of your capital each time, okay? Now, I've saved the most important thing for last, and you know what it is. You've heard it before, but I can't emphasize it more. 60% of your success comes down to your psychology, your mindset. And that's why many people, they can learn from the best gurus. They can learn the best trading system, but they still don't succeed. Why? Because they don't have the psychology and emotional management and discipline of that guru. And that's why in my trading courses, I emphasize a lot on trading psychology. And I believe that you can't teach psychology just from a lecture. Yeah, it goes in 1 year, goes out the other year. You can only learn through experience, right? So in my live trading courses, I put my students through games that simulate the real environment, where their emotions of greed and fear come out and they see how it affects them. And only when you can trade in a Zen mode, with no emotions, trading, with total no deviation from your strategy, will you make a lot of money. And that's what my students are able to do after they rewire their psychology, all right? So you got to have the discipline to follow the trading system consistently with no deviation, right? But this takes psychological and emotional mastery. And it's extremely difficult for most people who don't know how to manage their emotions. And that's why for me, learning NLP, neuro-linguistic programming, was so useful, because with NLP, I'm able to control my emotions really well, right? I can eliminate fear and build confidence within seconds, right? Especially when the trading system goes through inevitable losing streaks. So most people, the moment they've got losing trades, what happens? Oh, they freak out, right? Oh my God. And they start to deviate from the system, right? They start to say, I've got to make the money back, and they risk more money, and it gets worse and worse and worse. Or they are afraid to take the next trade. Or they start breaking the rules, all right? Let me put in a new indicator. Let me not follow this indicator, and it screws everything up, okay? So I use a metaphor, right? If I put a plank, okay, like this plank on the floor, and I say walk on the plank, it's very easy, right? I can walk, right? But if I put it 10 stories high, what happens? It's the same plank. It's the same distance. People freak out because of the emotions. So you got to learn to trade with no emotions. So I will cover a lot of trading psychology in my programs, whether the live program or the online courses, right? Now, let me show you something really interesting right now, which is what you can expect when you trade. This is what I call my trading simulator that will show you what you expect in trading, all right? So if you have, for example, a strategy with, say, a 50% win rate, right? Let me put 50% win rate. And you can see that every time I click this button, this simulated win rate will change, right? So this is based on the actual outcomes of 100 trades. There you go, 100 trades, right? Now, it depends on your trading system. Now, most of my trading systems, we do about, like for my swing trading system, I do about 10 trades a month. 10 or 15 trades a month. So we do about 100 trades or 120 trades or more in a year. So, but for my day trading system, I do about 3 trades a day. So I can do anywhere from 400 to 500 trades in a month. All right. So it depends on the system, right? So this is based on 100 trades, which again you should be able to do in a year. Okay. Now when I lose 1 R. When I win 2 R. Okay. and assuming that I risk 1%. Okay, so if you risk 1% and you have a 50% win rate, what happens? You can see that you get a 63% return on your capital. That from $10,000, it grows to $16,000. That's a 60% return. Now again, sometimes you may trade at a 50% theoretical win rate, but your actual win rate is 59%. So that's a 100% return. Now, let me ask you a question, okay? Would you like to get a 100% return a year? Would you like that? Yes or no? Not a trick question. Yes or no? Everyone says, yes, I like a 100% win rate. Yes, yeah, everyone says that, right? But are you willing to do all the work to get there? Are you willing to go through the journey of 100 trades in order to get there? There you go, 100 trades. And notice that there'll be times during your trading, you will have a cluster of losing trades. Right? Look at that. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Out of 13 trades, you win 3, you lose 10. It can happen in a small sample. So many people, when this happens, guess what? They give up. Or they start to break their rules. They start to change their system, right? Or they start to risk less or risk more. But at the same time, when you trade, you can also go through a sample of winning trades over here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 trades, and you win 11 trades, you lose 1 trade, right? So I keep telling people that when you have a losing trade, don't be upset. When you have a winning trade, don't be happy. Because in the short run, each outcome is insignificant. In a small sample, it's insignificant. If you keep following your system, you know that you will always make money in the end. It's like the casino. The house always wins in the end because they have got a system that gives them an edge over the players, right? So I really hope you understand this concept of what it takes to be a winning trader. Not winning all the time, but always winning at the end of the month, the quarter, or the year. Okay? So let me show you a few more examples of why this is so important, right? This was a WhatsApp message I got from Errol, who is from Malaysia. He attended my course about 2 years ago, driving his Lamborghini, right? Show off. Just kidding. He said, Adam, I'd like to thank you to let you know that your system works not only for swing trading, but also for intraday trading. My hit rate for Hang Seng is less than 50%, but I managed to triple my capital by using your 1 to 2 system. These are my stats for Hang Seng after 100 trades. Now, this guy, he trades on the Hang Seng futures. And he started with $10,000 and grew to $35,000. 250% return in 3.5 months. Now, I must say this guy's a bit crazy because he risked, I think he risked 10% of his capital, which you should not do, right? But this guy's got balls of steel. Or maybe because he's got a Lamborghini, so to him 10 grand is nothing, right? But if you look at his statistics, it's very interesting. Now, he did 102 trades in 3.5 months. So he trades very frequently, right? He had 45 winners and 57 losers. His win rate is only 44%. But his average win is $2,000. His average loss is $1,000. And that is what led to his net profits. Okay, that's what led to his net profit of $25,000. Okay, so it's about not the win rate, it's about the risk to return ratio. And this guy, Kenny Chu, said, Hi Adam, good day. It's been 9 months of live trading. I've officially doubled my initial capital, even though my hit rate is also 50%. I'm very glad I attended Wealth Academy last year. It was one of the few absolutely right decisions I've made. This equipped me with a recession-proof skill set. Doubled his capital in 9 months. Okay? And this guy, Merlin from Malaysia, he said, Hi there, my profits are inconsistent prior to attending your course. I've applied the knowledge acquired from the course and have made 9 times my course fee in 1 week after the course. Thank you very much for sharing your knowledge with us. He started with, how much did he start with? He started with about 80,000 US dollars. which is about a quarter million ringgit, right? Because he's from Malaysia, right? And this crazy guy, right? He grew, sorry, not 43,000, typo. He started with 83. Oh, sorry, yeah, he started with 43,000. Yeah, sorry, he started with 43,000 US dollars, and he grew to $400,000 US. He's using Think or Swim, all right, and he's been trading since 2001, which is an amazing record, right? Now, let me tell you the most important thing. The most important thing is not just the trading system. It's not just the position sizing. I find that to succeed, you need to have a community of traders that trade with you every single day. Because when you have a community, you remind each other, hey, follow the rules, hey, follow the rules. And you help each other look for trade setups. And you motivate each other, and you care for each other. So one reason why my traders and myself are so successful is because we trade together every day. And we discuss on Telegram chat groups. And let me show you some of our chat groups over here. All right, so this is really important, and this is my chat group where we just scout the Forex markets and we report our results, right? This guy said I got 3.4R, I got 3.8R, I got a 3R, all right, 3.9R, 4R, 4.6R, song means very good, right? 4R. So we share our results as we trade every day live, right? So this is a scalping strategy where we scalp the Forex markets within a few minutes to capture 4R, 3.9R, and all those things. This was another chat which I captured. It said, Chun Kwang said, yes, today's a good day for me with 3 winning trades, total 5.7R for 1 day of trading. Same, I got 5.1R total. Kelvin said that. I've got 4R. Yenny said that. He said, thanks, Adam, for the constant coaching and helping us to get back our course fees. You're welcome, right? And this guy's Michael Eldridge. He's from the US, one of our international students. He said, Adam's the man. I've tried loads of strategies and his is by far the most reliable if you stick to the rules. One lesson I learned is not to trade on the iPhone. Ha ha ha, okay? Lance said, this was an email from Lance. I'm writing to let you know how much I appreciate the trading tips and strategies you shared. My name is Lance. I'm a Singaporean in Malaysia, mining industry for many years. Because of the guidance, I'm seeing 50% returns from my Forex investment, which I just started in 1 month. Have a great day ahead. All right. And every day we call out trades to each other. We say, hey, there's a trade on Aussie Yen. All right. There's a trade on Aussie Yen. Hey, there's a trade on Aussie CAD. Right. And when everyone knows the trade, we trade together and we thank each other. Right. I say, thanks, Adam. I took profit. TP is take profit at 1.7R. Thanks, Adam. 1.6R. 2R profit. This guy says, I love you, thank you, friend. 1.5R top. I'm not a gay, by the way, right? Nothing wrong, but I'm not a gay, right? 1.6R. And this guy, Jake, said, thank you, bro, for calling out the trade on, how was that? This was Aussie CAD, 2R, TP. So we help each other every day to find trade setups. This guy is from Norway, Einstein. He said, just a small testimonial. I'm now done with 3 weeks of journaling since I took the course. 6.25 returns in a month, 17 trades, average win 1.74%, average loser 1%. And Yenny said that I'm up 22R over 5 months. It's about 4R a month or 4% return a month, right? Trading this. This guy's Michael Bradley from the US. Here are my stats for the month to show what can be done with discipline and selecting only high probability trades. I took 22 trades in a month and got a return of 17.9R, 17% return in a month. This guy, Brandon, from my Malaysia batch, he just started, by the way. After Adam's FX class and videos, just took 3 trades this week. All of them was taking profit over here. All right. Thanks for being a great teacher. If you like this video, click on the subscribe button to get my latest video updates every month or every week. If you want to check out my live trading courses in Asia or check out my online investing and trading classes, do check out wealthacademyglobal.com for my live classes in Asia or piranhaprofits.com for my online professional stock and Forex trading classes. This is Adam Khoo and I'll see you guys soon. May the markets be with you.